Hey, ladies and gentlemen, Tom Willard here, back. Sorry for the hiatus. Had some projects going on and wrapped a number of things up. So I'm glad to be back here doing another lesson. This is going to be about candle quality and don't assume. And I'll explain that here shortly. So get comfortable and feel free to watch this as much as possible because I'm going to try to break down these next elements that are important to your trading. Now, those of you guys that are following me on Twitter, when I tweet out ideas um, during the trading mornings, um, you may have noticed on the 5th of December here, I talked about how the Qs was just really ugly. And so candle quality means, for me, it means the quality of candles in relationship to one another. Okay, so when you're a technical trader, you are making decisions to enter or exit trades based on the candlesticks. Okay, it's technical trading, and if the candlesticks are acting in a manner that shows zero respect for the candlesticks leading up to that point, how can you make a confident decision buying such thing as a breakout, for example, because it showed, it's shown, is giving you proof leading up to that point that the candles prior to it don't necessarily mean anything. The pivot points aren't holding. You're getting violent reactions up and down. You'll see here on the 5-minute chart of the QQQ, I mean, this is just ugly. Like I said, it fell off the ugly tree, hit every branch on the way down. Green bar up, okay, pivot high, straight down to a new low for the day, fills the gap, back up violently, back down, back up, back. This is what we call slop. And when you get charts like this, and this is the good thing about trading equities, okay? Because the equities, you got so many different options. You can say, you know what, screw this, I'm not trading this, I'll go find something that's cleaner. And I'll show you some examples here. And avoid this because what I would say is that if you're a technical trader, just avoid stuff like this. Unless you're doing more broad-based things where you're just buying support areas, selling resistance areas. And I'll show you another example of that here shortly too. Okay, but for the most part, if you're a precision trader, trading breakouts, pullbacks, retracement setups, etc., it's best, in my opinion, to just avoid these. These are lower odds situations. Can they work? Absolutely. Anything can work at any time. But if you're a technical trader, you're a long-term odds on your side type of situation is got to be your thought process. So you can even see here, look, this little you can even see it's kind of a cup with handle that broke out and then it failed. Now it could have worked, but this is the typical action that happens. You just get a lot of failed breakouts, up and down, full retracements, and just a lot of garbage. So this is what I call slop. Okay, a few other examples of slop here. Let me give you another one here. That's the Qs. The spies was pretty sloppy, right? But you see, it wasn't quite. I mean, it was violent up, down, up, down, up, down, and then up, and then try to break out, and then worked its way down. So not quite as sloppy as the Qs. Hopefully you can see it. Here's Qs. Okay, look at how sloppy that was, and here's the spies. Okay, so the spies was a little cleaner. Spies were a little cleaner on the 5th of December. A few other examples. Check out Chesapeake. You can see here, look at the nervousness of the candles, right? Topping tails, engulfing bars, down, up. This is not high odds. You're buying a pull. If you say, well, this is a pullback, I want to buy it here, it's not a high odds setup, right? You would have sat here and gone, oh, okay, great, and then you got jerked out here on the pop below the pivot, depending on where you put your stop. Typically, that's where you do it on a pullback. So these are the types of charts you just want to avoid at all costs. LinkedIn's another one that's notorious, right? I mean, good lord, this one's probably the poster child for ugly candlestick action. Just do not trade this on this time frame. That doesn't mean you can't trade LinkedIn on a daily or a weekly, but you can see that the slop here and indecision and meaninglessness of the pivot points plays out. Okay, and if you're a technical trader, you rely on those to make good decisions. So if it's showing that, if it's showing that it's not reliable, why would you trade it? Okay, avoid slop at all costs. Now let's go back and look at a couple of cleaner ones. Some of the more lower dollar ones will be cleaner. Zoma here, obviously pretty clean. You can see there's a lot of consolidation. Okay, the candlesticks aren't wild and all over the place. IGT, you can see also here $17 stock, trades pretty clean. Now you may not get as much dynamicism. Amazon here actually, $300 stock. For the most part, you can see it's whippy here, and then here, for the most part, you can see it's more trending. There's not pivot whips. It's not going back down, all the way back up, back down, at least on this day. Okay, here is doing a little more of it. So the personalities will change. And a perfect example of a transition point, look at Caterpillar. Okay, Caterpillar on the 5th. Really sloppy here, right? Whipping around, whipping around. Now notice here, notice how it tightens up in the afternoon, okay? If you're trading more of the afternoons, uh, I've noticed that as of late, it seems like there's more of a slop fest in the mornings, and things kind of tighten up in the afternoons. Not always, okay? Let your experience kind of be the guide. And there are some great morning setups too, of course, as well. That's where I spend the lion's share of my day trading time anyway. But notice how, look at this. Look at the control. Look at the discipline of the candles here before it breaks and puts in a really nice move. I mean, if you go reward to risk perspective on this breakdown, okay, of this larger, it's kind of like a geometric pattern, kind of a triangle that breaks below here. You've got probably about a 10-cent stop, and obviously plenty of return on this. And this is the kind of trading you want to get into. A nice tight stop, instant reward, instant gratification, and these are out there. You've got to get, you've got to look at what you're looking for. But notice the personality can change. So if something's trading sloppy, that doesn't mean you completely ignore it. If it's something that's in your universe, if you establish it as something that you like to trade and you've had success trading, then keep it around. But if it's trading sloppy, don't trade it then. Keep an eye on it, and when it starts to tighten up, okay, you may be able to make a decision to get in with a better odds, better situation where the odds are more on your side, okay? So that's the breakdown between candle quality, crappy candlestick formations versus cleaner candlestick formations. And shoot for the cleaner and know that things in transition. The best thing to do is when you develop experience, you're looking at your various universal stocks. You know which ones you like to trade. Keep those around. Just realize your Facebooks, your Twitters. I like trading those. I like BABA, but for the most part, BABA is a god awful mess. Right, on the charts, but you can make some serious coin on these things if you time them right, and you find, and they will become more disciplined at certain times. So watch them. I remember Facebook a while ago. I called it out with a bunch of other traders. I said, look, it's winding up here. It's getting ready to explode like a spring. And sure enough, boom, I mean, it was gone, $1 or so in a very short time period with a very, very small stop. So that's what you want to be looking for, okay? Now, last but not least, one of the problems I see a lot of people, and I see other people out there teaching this crap to people, and so I want to kind of lay it out there that, listen, just because you see a bar doesn't mean that something has to happen. So, for example, I saw someone showing and teaching that, well, if you get a big red bar, okay, then or a big green bar, then then the assumption is that it's going to fall through. It's going to go the other way. Now, just looking at the spies here, for example, you'll see here that we've had that really, really. I mean, that's a vicious sell-off there, right? And if I recall things rightly, I remember all sorts of people on the news, TV talking about, oh, here it comes. It's things are going to go down the sewer. Here's the correction we want. It's October, blah, blah, blah. And notice this. It came all the way down here, took out all this pivot, a lot of this support, okay, and then it turns right around and goes right back up. Okay, now what happened to the traders that said, well, we're definitely going down for sure, and they're holding on and short and short and short, and they're getting their rear ends handed to them, okay? Do not make that assumption. Just because there's some big bars or a big move one way or the other, that has to continue. Okay, and I think these grind-up situations are so prevalent, especially since about 2009, when things started to bottom after that 2008 debacle, where you get this grinds because these people say, "Oh, well, only the pros short." BS. Anyone can short. Okay, that has a margin account, as far as I know anyway. And I know people that short that have very little experience in the market. So for someone to go out there and say, "Well, only the pros are shorting," I think that's a bad assumption. And I think that's why you get these grind-up situations, because you do have a lot of novices shorting, thinking it has to go down, and they keep getting their rear ends handed to them. Okay, and then things keep going up. So this is a perfect example where you have big red bars, people are assuming it's going to go lower, and they're shorting the crap out of this thing all the way up, and they're continuing to get clobbered. Okay, and it helps grind things up. All right. Now another perfect example. This is Boeing. Check out Boeing here. Here's a very, very big red bar. It's ominous. There's no doubt that on this day, if you had asked even me, said, "Hey Tom, what's your assessment of Boeing here?" I'd say, "Well, that was a pretty crappy day it had there. Huge volume, okay." And I've seen people out there teaching, saying, "Well, this is a giant red bar in volume, therefore just get short, okay, because it's gonna go lower." And it's a perfect example where I shake my head at some of the students of these folks that blindly follow them without thinking of themselves or using stops, and they get killed, absolutely killed. Okay, by wanting this black and white, no, you've got to have stops, you've got to have a plan. Okay, if you would ask me that day, where would I lead? I would say I would lean short, But I don't get into something without a pattern. You'll see me tweet that. I'll put out and say, look, I'm watching XYZ, but wait for a pattern, wait for a setup. And so I had the setup video earlier. I'll do some more setups. I got some more advanced setups that I've developed or observed that I use that I'll do in some future videos. But you've got to have a plan, guys, and you can't just assume. So that's the don't assume part of the title of this, okay? Don't just jump into something because you know, quote unquote, that it's going to go one way because of one thing. Yes, that's a very bearish candle, but as you can see, anything can be overcome, and anything can happen in this game. Okay, pivots get taken out. Look at this pivot gets taken out. People go, okay, time to get short. There's no support to the left. All right, and that's exactly the worst time to be short, and it's to be buying. Okay, so anyway, hope you found this very useful. I know it's been about a month or so, 6 weeks since I last did a video. I'll be doing more as we go forward. I appreciate all the kind response. I appreciate the patience of you guys that have been emailing me, asking me to do more videos. So, and if you have ideas on things you want to see, feel free to email me, tom@tomwillardtrading.com. Have a great trading week.